introduction to international tax. In this we're going to take up three main topics. First is what is international tax? What do you mean by international tax? International tax. What is international tax? A very brief mention of tax treaties. Very brief mention of tax treaties. Goals of international taxation. Goals of international taxation. Goals of international taxation. There will be 4 goals and then we'll discuss. Fine. And then we'll have certain concepts within this. Fine. So international taxation, tax treaties, goals of international taxation. The second portion would be what? Second portion would be your nexus. I don't know whether you have been following or not this entire sequence of developments that has been occurring in the field of international taxation for the last 2, 3, 4 years. But when Pillar 1 extensive rules were Pillar 1, Pillar 2 and economic, in October 2020 actually OECD had come out with 4 documents. 3 documents were very bulky. Economic impact assessment of Pillar 1 and Pillar 2, then Pillar 1 detailed document, Pillar 2 detailed document, and then there was a concise summary. So 4 documents. So in those documents now, there was a repeated mention of nexus rules. Nexus is very important. Nexus, the literal meaning of the word nexus is link, connection, attachment. Nexus, link, connection, attachment. So nexus, right? Residence, source, fine. Residence, source, and the related concepts. Residence, source, and related concepts, fine. And then third, we'll move over to what? We will move over to double taxation. Double taxation. What is double taxation? Conflicts, types, and then ultimately relief from double taxation. So this is your structure for introduction. And mind you, after we would have covered this now, a substantial portion of your pre-tax treaties syllabus, a substantive portion of your pre-tax treaty syllabus of your PIT would be completed. Right? So I mean, this whatever I'm sharing with you, this has taken huge amount of cognitive input and intellectual input from my side. Right? And you won't find this sort of structuring being given anywhere. Right? It's my guarantee. Right? So this is the structure for the introduction to international tax. Right? So now that I've given you this structure, obviously we're going to start off with international tax. Right? First one. Okay, I'm going to rub this. Okay, so what exactly is international tax? Since we are all students of international tax. What exactly is international tax? You would be surprised to know that international tax is a misnomer. International tax is a misnomer. Misnomer in the sense there is no such thing as international tax. International tax law. The more appropriate term, the more appropriate phraseology, the more appropriate description would have been that this international tax that we normally use, this international tax, this term, this phrase international tax that is normally used, this actually means, and I'm going to write this, international aspects of income tax laws of particular countries. This is the appropriate description. This is the appropriate description of the phrase international tax that we normally use. I also use, you would be using, and the entire world uses. Fine. So when we say international tax, we are actually referring to international aspects of income tax laws of particular countries. Why? Because there is no, because in tax laws, if you look, tax laws are not international. Can India create taxation laws for USA? Or for that matter, can USA create taxation laws for India? No. Why? Because tax laws are creation of sovereign states. Sovereign, I mean sovereign, the meaning of the word sovereign. Sovereign is a word which is used in the constitutional sense of the term. That sovereign means that the country is supreme internally and it doesn't recognize that somebody, some other country is superior to it externally. All the countries are sovereign, and because the countries are sovereign entities, sovereign states, nations, that is why one of the very important, one of the most fundamental attributes, characteristic qualities of any sovereign state is that it has the power to create taxation laws. Fine. So tax laws are not international. Why? Because they are the creation of individual states. So when India is creating its own tax laws, USA is creating its own tax laws, and then Netherlands, Australia, UK, Japan, everybody is creating its own tax laws. So how can you have an international tax law? How can you have a law which will be applicable for all the countries? No. Right? So tax laws are not international. Very, very clear. Tax laws are not international. Why? Because they are creation of sovereign states. Tax laws are creation of sovereign states. Creation of sovereign states. Sovereign states. And there is no customary international law. There is no customary international law, as well as there is no supreme body like OECD or United Nations that has created a international tax statute for all the countries to follow. No, sorry. OECD Model Tax Convention, United Nations Model Tax Convention, they are only sample, they are only models. Whether any country wants to follow them or not, it's completely country's choice. Right? So there is no supreme body which has created or which can create, which is empowered to create the taxation laws for the entire country. No. Fine. So there is no customary international law that everybody should follow this custom. No. There is no custom. Neither there is a body, organization that can create tax laws for the entire country, entire world. That is why I am saying tax laws are not international. So when we say that we are international tax professionals, what exactly are we referring to? We are referring to this. We are referring to international aspects of income tax laws of particular countries. Fine. This should be very, very clear. Why? Because tax laws are creation of sovereign states. Having said this, because you are the students, I need to clarify your fundamentals. I've told you this, but the most common phrase which is used in practice is international taxation. So with this understanding, keep this understanding in your brain, in your mind, but understand this, right? And we'll continue to use the phrase international tax, right? But remember this: tax laws are creation of sovereign states. International taxation should be more appropriately addressed as international aspects of income tax laws of particular countries. Tax laws are creation of sovereign states. There is no customary international law or no apex body that has created international tax law for the entire world. Fine. Okay. Having understood this, if we move ahead, then we find that nonetheless international taxation is practiced. And when we go to the practice of international taxation, then we find that the most international portion of any country, the most international portion of any country's income tax law is the tax treaty. Are you able to understand this? The most international aspect, the most international portion of any country's income tax law is a tax treaty that country has entered into with other countries. So if you say that what is the most international aspect, then tax treaties are the most international. most international aspect of your income tax laws of any country. Fine. So now we have the first mention of tax treaty, and I've already told you that for 3 weeks we're going to deal with tax treaties. So only mention will move ahead because this is the introductory portion. Tax treaties actually involve 2 states. Tax treaties involve 2 states. 2 states. Country A, country B. India, US. India, UK, India, Singapore, India, Mauritius. 2 countries. These two countries who enter into this agreement, who sign the tax treaties, the signatories to this tax treaty, they are known as contracting states. Very important. So CS, contracting states. In short, CS. So A and B, they have a tax treaty. A and B are signatories to a tax treaties. Right? So signatories to a tax treaties who sign the tax treaty, participants, parties, countries who sign the tax treaty, they are known as contracting states. Very important phrase, right? Contracting states, because tax treaty is an agreement. Agreement what? Agreement. An agreement enforceable by law is known as a contract. Section 10 of Indian Contract Act. Fine, but and that is why they are known as contracting state, because if they are entering into an agreement, that is a contracting state. They are undertaking upon them certain liabilities, certain obligations, that I will perform my share of obligations and you will do so with your. That is like contracting states. CS. So from now on we would be using this term CS. What are CS? Contracting states, signatories to this tax treaty. Fine. Okay. Any idea what is the total number of tax treaties in the world as of now? Any idea? Swati?
More than 95.
More than 90? Great. Swati? Number of tax treaties in the world? Narendra and Pramit?
97.
97, okay. Narendra and Pramit, any idea?
No, sir.
Any guess? Total number of tax treaties in the world? Narendra? 95? How much? 98,000? 95 to 100. Okay. Please switch off your mics. All of you are completely wrong. Total number of tax treaties existing in the world as of now, I don't have the exact number, but total number is, I think it's more than 3,500. You can say around 3,500. Total number of tax treaties. Total number of tax treaties in the world. Around, that is I am saying around 3,500. Sahil? Fine. Around 3,500. I think last time I checked it was 3,476, but I am not giving you the exact number. It's around 3,500, 3,500. Right? So you see that there is an extensive network of tax treaties existing in the world. Fine. Now, if I give you 3 basic features of tax treaties, remember those, and we will be making use of those features. Fine. 3 basic features of tax treaties. Basic features of tax treaties. Number one feature is treaties restrict. Tax treaties limit, very important, or restrict. Tax treaties limit or restrict the taxing rights. Tax treaties, they don't create, very important, tax treaties they don't create taxing rights, they limit taxing rights. Very important. Tax treaties limit or restrict the taxing rights. This is the most important feature. They don't create taxing rights. Taxing rights are created by the domestic laws. Why? Because remember, tax laws are sovereign creation of sovereign states. So tax treaties, they don't have the power to create taxing rights. Taxing rights, they exist in the domestic tax laws. The function of tax treaty is very important function. The most important function is they limit or restrict the taxing rights of contracting states. Number one. Number two, second feature, as I've already told you, they don't impose taxes. They don't impose taxes. They do not impose taxes. They do not impose taxes. I have already told you, I have already given the reason why. Because taxes are imposed by what? Indian Parliament for India. How can the tax treaty that we have entered between Britain, how can that tax treaty impose taxing rights upon us? No. That tax treaty, India-UK tax treaty, can only limit the taxing rights of India on certain categories of income as well as UK. And that too on a mutual basis. Understanding. Fine. They do not impose taxes. They limit, restrict the taxing rights of contracting states. Number two, they do not impose taxes. And number three, they limit. Okay, they limit. Their main feature, they limit, restrict taxing rights. They limit or restrict the taxing rights of contracting states. They do not impose taxes. And then, okay, that's also a feature. Tax treaties have to be incorporated into the domestic tax laws. They have to be incorporated, included, or transposed. Transposed can be a term. Transposed in domestic tax laws. In domestic tax laws of each of the contracting states. Domestic tax laws. They limit, restrict the taxing rights of contracting states. Most important. They do not impose taxes. Very important. Number three, they have to be, tax treaties have to be incorporated or transposed, adopted into the domestic tax laws of which countries? Of contracting states. Fine. Here, although that's an advanced concept, but I'll give you that as well. Since you've joined International Tax Academy, I'll give you that concept as well. There's a concept of monist countries and dualist countries. Three, you have monist countries and you have dualist countries. Monist countries and dualist countries. Monist countries and dualist. Monist countries, supposing I'll give you an example. A and B, they enter into a tax treaty. A and B, they enter into a tax treaty. A is Netherlands, B is India. Perfect. NL is Netherlands. A is Netherlands, B is India, they enter into a tax treaty. As soon as Netherlands entered into this tax treaty with India, this tax treaty becomes a part of its domestic tax law. Automatically. As soon as Netherlands enters into this tax treaty with India, this tax treaty, India-Netherlands tax treaty, automatically becomes a part of Netherlands domestic tax law. Why? Because Netherlands is a monist country. Mono, one. Only one action is required for the treaty to become a part of domestic tax law, and that action is what? Signing of the treaty. Done. Treaty automatically gets incorporated into the domestic tax law. Monist. India, you sign the tax treaty, and then Parliament will bring out an action, notification or some sort of order that now this tax treaty is a part of your Income Tax Act 1961. So two actions are required. First action is what? Signing of the tax treaty, and second action by the Parliament. So that is why India becomes a dualist country. Clear? So they have to be incorporated, transposed into domestic tax law. So this adoption can be automatic in case of monist countries, while it may require an explicit separate action in the case of dualist countries. Is this concept, basic features of tax treaties clear to all of you? Everyone?
I have a question here.
Yes.
So I think if India wants to enter a treaty, then there is no need to go to the parliament.
If treaty has been signed, after signing of the treaty,
Okay.
understand the difference. I am not saying that for signing the treaty, government needs to go to the parliament. No. Article 253 of the Constitution, I remember Constitution by heart. All the 395 articles, 395 articles at that time, 12 schedules. Fine. 12 schedules and those parts. Article 253 of the Constitution that actually empowers that the government can actually enter into, and even for facilitation of entering into any international agreement, it gives special powers to Parliament.